Hey everybody, welcome back to the channel. SoFi is going to report its earnings on 129, so in about 2 weeks or so. And due to that, there is a lot of implied volatility that has increased getting into earnings. And this gives you an opportunity to get into trades and be profitable. So in today's video, I'm going to share with you a couple of price targets that have recently popped up. Then I'm going to share with you the technical analysis of SoFi chart, trade idea, and then there is actually a trade that I am currently in, and I'm going to share with you how it's doing and what was the logic behind it. So if you end up enjoying today's video, make sure you give us a like. And without further ado, let's dive in. Now, over the past 1 year, SoFi stock is up 47.2%. The stock was somewhere trading around $5.44 and it hopped down right now at $7.89. So that's about 50% almost that you gained if you invested in SoFi at the start of 2023. Now, we all know that SoFi is a retail favorite stock, and then also we are seeing a lot more analysts finally coming along and supporting SoFi along the way. However, in the last 3 months or so, we have seen couple of maintaining their price targets and some downgrade, or in fact just one particular downgrade which came out on 1-3 from Kaye, Bruet and Woods. They reduced the price target from $7.50 to $6.50. So that was a downgrade. On 110 from Deutsche Bank, we got an iteration of their hold rating at $11. If you look at all the analysts and their price targets, currently the average price target is about $9.67, which presents you an upside of 22% if you are actually investing in SoFi. You have two strong sells and one sell, along with the majority of the analysts are putting a hold rating on SoFi with 12, with 4 strong buy and 1 buy rating. There's a lot of expectation this year that SoFi is going to become profitable, and that may lead to a lot of buying in by the retail investors throughout the next couple weeks and even next couple quarters. If you are a big fan of looking at price targets of SoFi and then having your investment based on that, just take a look at this particular chart. So this is for the entire life of SoFi. The orange line is the analyst price target and the blue line is SoFi's actual price. If you notice in the beginning when SoFi just IPO'd in the middle of 2020, analysts started covering SoFi after some time, and there was always this big gap between the actual price of SoFi and how analysts were perceiving. And we see that pretty much playing out throughout 2021, getting into 2022. There was once a time in middle of 2022 when the analyst price target touched SoFi price. Around the late 2022 to early 2023, we saw a lot more correlation between the analyst price target and actual price movement of SoFi. Now, what this chart shows you that now as the company has proven itself with a different business model, since they have a big student loan business, they are also getting into mortgage, plus it's a bank. Now the analysts are able to figure out how to evaluate this company, and that's the reason why the price targets have started to align itself with the real stock price. Now, this was a great interview back in 2023 December by Malcolm Etheridge, and he talked about why SoFi's profitability is actually important for SoFi's growth is because once they have a profitable business, their reserve requirement, the capital reserve requirement also goes down because now the company is much more stable and profitable. And also the second point that he makes, SoFi is not just a bank, it is actually a banking as a service. So what does that even mean? It means that with the advent of Galileo, other companies that want to get into fintech, they don't have to build everything from scratch. They can actually use SoFi's infrastructure to actually provide these products and services. So those are a couple of great points that he has made. I would put the link of this interview. It's a pretty short interview of 3 minutes. I'll put the link in the description of the video. You can definitely check it out. Now, when it comes to SoFi, we always love to check insider trading, if Anthony Noto has bought any shares or not. But unfortunately, the last buy from Anthony Noto was on 11/21, and that's where he purchased the stock around the 650. But if you notice that most of the purchases by most of the people is around the $650 to $7. Now, before we get into the technical analysis and I show you the charts and we go through the trade ideas, I want to first show you how the put and call ratio looks like for SoFi. Now, looking at this in 119, we have about a put to call of 0.78, so which is very bullish. You have a lot more call options open against put. With about 126, it goes up to 0.54, so very bullish, about 42,000 call options as opposed to 22,000 put options. There is a lot of hedging going on 2-2. Why? Because SoFi reports earning on 129. So you will see a lot more hedging by investors and traders just in case SoFi is not able to prove itself. At the start of 2024, SoFi stock has seen a downward trend. Now, if we step back for a second, this is the weekly chart for SoFi. And before we saw this decline, there was 6 straight weeks of gains for SoFi. SoFi ran up all the way from 641 to 1049 in a matter of 6 weeks. Of course, when that happens, you will see some profit taking, and that's exactly what we are seeing over here for the last 2 weeks. When we switch to the daily, we see a little bit of a different view over here, and currently SoFi is at a critical point. SoFi stock is trading currently below its 20-day moving average. It even dipped below its 50-day moving average. So that is a little bit of a concern, especially with the 200-day moving average coming up very close around 776. Generally, this area between 786 going all the way to 803 has a lot of buying pressure in there. So you can see this big volume over here. There's a lot of buying that comes in here. Of course, the buying volume reduces as the stock starts falling down, and then we start to see it stabilizes around this level of 691 all the way going up to about 730. So that's where you will see a lot of insiders also getting on the bandwagon for SoFi. For next week leading up to earnings, what we would like to see the stock price stabilizing and not breaking down below its 200-day moving average. So with that backdrop in mind, how do we look at the trading for SoFi leading up to its earnings? I will share with you 2 trade ideas. One that will aim at investing, where you can accumulate a lot of shares at a decent price, and the second will be a YOLO trade that you can also play along if you would like to. So let's start with the one where it will help you accumulate SoFi stocks if you want to buy SoFi stock. The first trade idea is going to be selling cash secured put, which is one of my main strategies in order to acquire stocks. Now you can, of course, once you acquire, you can just let it be in your account, or you can sell covered calls against it. It's really up to you. But in order to acquire that, I will look at around February 2nd expiration date. So that gives me about 3 weeks of run times, about 18 days or so. As I showed you on the chart here, the stock has 797 is what I'm really targeting, but the stock is actually below that price. So you can look at opening a cash secured put for $7, which has a delta of 25, which is not bad, and an implied volatility of 93%. So you're getting 30 cents on your investment of $7 per stock. So that leads to about 4.2% gain in the 18 days that you have. Now, if you end up getting assigned, your cost basis will be $6.70 because you get 30 cents for one stock. Of course, that will become $30 for 100 stocks, and depending upon how many contracts you can open. So that would be one of my trade ideas. If you're feeling very generous, you can even go at 7.5, but remember the delta goes up 30. Now 30 is a very interesting spot for delta because most of the times when you are playing above 30, most likely those contracts get assigned to you. If you're playing below 30 in the 20-25 range, most of the times those contracts are expired worthless. So this would be a much safer trade if you open a 7 strike, whereas if you go 7.5, most likely that may get assigned to you. Alright, the second trade is going to be a YOLO trade. I'm looking at buying a call option for 8.5 expiration February 2nd. Currently that is available for 49 cents or $49. You can buy one contract. It's actually down $15 since the stock has been on a selling trend. Look at the implied volatility, 102.3%. So if I actually get that, and this is going to be a complete YOLO trade, we can actually get unlimited profit, but the max loss will be about $49, which I can actually cover by selling cash secured put. So the credit that I get from there, I can use that to buy this particular call option. Remember, this is going to be a YOLO binary trade, hoping that the stock goes up and we make some profit. The other trade I talked about is a much more defined trade where you are actually putting yourself in the driver's seat by collecting premium for buying that stock. And in case you believe in SoFi like I do your own due diligence. I believe owning stocks by getting paid to own those stocks is much better than just outright buying the stock from the market. The last thing that I promise I'll tell you is the current trade that I'm currently in. If you don't follow me on Twitter, make sure you do, because I do post my trading ideas right there. This is pretty real time. So on January 8th, we were trying to watch for SoFi whether they are going to break this 847 mark or not. I actually ended up opening a contract on January 9th, and we sold a put for $8 expiration February 2nd. Premium we got was 57 cents on that contract, and this is how currently that trade is proceeding. It's unfortunately I'm at a loss right now. I'm down about 18%, or I'm down about 34%. Currently that contract is worth 76 cents, whereas we only collected 56 cents. So with this trade, basically after selling an $8, I got 56 cents. So my current cost basis is $7.44. I can of course go ahead and roll this before the expiration to collect more premiums. So we'll see how this trade plays out. I'm really hoping that this trade will expire worthless and the $563 will be in our pocket. So there you go. That was all about SoFi, how I'm going to be playing SoFi for the upcoming earnings. I will do a post earnings review of the stock as well, and hopefully they will report some profitable earnings. So we'll see you how that plays out. And in case you have any more questions, make sure you drop it in the comments. Make sure you follow me on Twitter as well. And if you end up enjoying today's video, make sure you give us a like, click on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.